On social media, many Nigerian young companies were celebrating, wow, we raised Series C, we raised Series D. And anytime they raised these monies, everybody hailed them. But what was behind it? What is behind every raise is that the entrepreneur founder is diluted significantly. We had a very interesting session, and in one of the sessions, there was a role play about a case study on CWG PLC, which is a company that I founded. And the case was written by Columbia Business School to discuss a point about venturing, about entrepreneurship, and about funding for the enterprise. And the case ended on the question, should Austin Okere take the venture capital investment or should he reject it? Just a little bit of background. So this is a company, CWG, in 2005 that was doing very well. It was riding on the back of the Y2K that just happened at the turn of the century, was riding on the back of the telecom boom that happened immediately after the civilian government of OBJ and GSM was launched, was riding on the back of the bank consolidation in 2005 that was done by Governor Soludo. And in each of these booms, CWG had positioned and taken good advantage. So this is not a company that was in dire need of cash or was desperate in 2005. But we had a plan to list our shares on the stock market, and we thought that the best way to do it was to first do either a private placement or better still to do a venture capital fundraise so that they will bring discipline into our operations, governance, strengthen our governance, and of course, bring more technical knowledge. And if people saw that this company was invested in you, probably it will make the listing on the stock exchange more attractive. The issue here is at what price? And I remember that I've discussed something similar on this on social media where many Nigerian young companies were celebrating, wow, we raised Series C, we raised Series D. And anytime they raised these monies, everybody hailed them. But what was behind it? What is behind every raise is that the entrepreneur founder is diluted significantly. So if I use CWG as a case study, the case that was written by Columbia was that there was an offer of $8 million for 25% of the company, putting the valuation post at $32 million. Make no mistake, the Treasury bill's interest rate is 15% sometimes. Now, if someone is going to bring his money to invest in your company, he's looking for way more than that 15%, given that there's a high risk that his money will not come back. And the rule of thumb is that they're looking for 3 times what they brought in within 5 years. So in our case, they were going to be asking for $24 million within 5 years, or you list and give them a liquidity event or an exit. You have to check very well that this $8 million that you're taking in, you can do business in such a way that the value of the company can cough out $24 million in 5 years, regardless of exchange loss. Here is where it gets complicated. So you receive $8 million, which is converted to you in Naira. 2005 probably was about 130. Now, whether the Naira suffers devaluation or not, you're going to pay that $8 million. Now, paying $8 million, 5 years later, where the Naira is maybe 250 or 260, whilst you are generating your revenue in Naira, becomes almost impossible. And if the venture capital firm then has to take assets because you can't pay, he will end up owning, of course, a big chunk of your company, nothing at all. You begin to look like a management staff in the company you founded. So in our own case, we held out and we didn't take the money. And in 2009, when we took a subsequent one, the company was valued at $55 million, plus that there'd been an exchange loss. So the company was valued much more than the $32 million, and plus the fact that in Naira terms, they would have owned more of our company. My point being, don't sell your seed. Rather, till your seeds, let it grow into a fruit, and sell at the fruit because the fruit is plentiful. A lot of our startups rush out to sell their seed and they sell it cheap. To complete that story, we actually then listed the company in 2013 for $90 million. Now, I did a rough calculation. If we were in dire need of money and we borrowed $8 million at an interest rate of 20%, at that time, Naira, we'll be returning Naira money, and we'll be returning something like, even if you take 100%, we'll be returning another $8 million in 5 years' time. But given that the company's valuation had gone to $55 million in that time, 2009, when the second PE company invested, we would have been better off taking the debt because we'll be returning an extra $8 million rather than 8 times 3, which is 24, that would have had to give $24 million that would have had to pay the VC company if we had taken the money at that time. So the delta is huge in terms of debt versus equity. So the point is, at some point in time, equity seems cheap, deceptively, but debt is cheaper. Especially at the early stages, what you have is a seed. You don't sell your seed. Have patience, hone it, bootstrap it, take debt to finance specific deals, makes you disciplined, and then when you have your fruit, you can then invite investors to come and you make more and you don't lose a huge percentage of your company. You actually do still own a huge percentage of your company. Be patient. Don't rush out to collect funds and celebrate it. You will have to pay back. Thank you.
My name is Dr. Rafiu Oladipo.
My name is Baba Jalal Repega.
I'm Reverend Juliet Benite.
I'm Godi Odidi.
My name is Professor Oladokun Sulaiman Olarawaju.
Souq News is on the ground, loading.
Very enlightening, very educative, and entertaining.
Thank you to Souq News.
So I'm happy that Souq TV has come into existence.
I'm happy to be here in the Souq News.
I want to encourage you to subscribe to the channel and keep watching news that makes sense.
As Browning said, one's extension of one's reach should not exceed one's grasp, or what is heaven for. And I think Souq News is doing that.
Africa needs a voice of truth, and Souq News has become one of them. And get ready, get ready, get ready.
And keep watching.
Keep watching Souq News.
Keep watching Souq News. It's a place to be.
Keep watching.
There's been a lot of fund raised, especially in the tech environment in Nigeria. And there's every need to be cautious, not to think that the fundraise itself is the end point. It's a means to an end. If the job is 100%, the fundraise is just 20. There's still 80% to go. So what you certainly do not do is to raise funds and shortly thereafter go onto social media and brag about the brand new car you bought or the apartment you've moved into in Banana Island. It doesn't make for good optics. And unfortunately, when you really need the benefit of doubt, you might not get it from your investors. You don't raise money and then ask, so what should I do with the money? At that time, it's too late, you've lost the plot. When you raise money, you would have raised it based on the back of an agreement with your investor, clearly outlining how the money will be spent and how the returns will come. It's imperative to stick to that plan. And if anything changes in the environment or in the business and you have to pivot or there's going to be a significant change, it's imperative to then get the buy-in of the investor. The investors are not philanthropists. this is what we need to understand. They are not giving grants. The investors are astute businessmen who are not necessarily content with the normal rate of returns of placing money in the bank or buying bonds. And that's why they take the risk of putting their funds in a risky venture such as
is it Obey if you want? What do you
which
call
has
it?
no track record. What we have to bear in mind is that when the investor gives you any amount of money to invest in the business, come rain or shine, he will typically ask you for 3 times of that in 5 years. So let's do the math. Let's say that I took $1 million as a raise from an investor in, say, 2015, when the dollar was 200 naira per dollar. 5 years on, in 2020, I'll be expected to return to that investor $3 million. $3 million in 2020 at 440 per dollar is about 1.32 billion naira. Now, if you keep the money for longer, then it's even getting more tricky because the exchange rate is falling and you have to do more to pay back. Let's put that figure aside. Bear it in mind, 1.32 billion. If I had approached the bank in 2015 to borrow the same amount of $1 million, at that time it was 200 million naira. So I borrowed 200 million naira. Interest rate is 20%. In 5 years, that's another 200 naira. So what I'll return to the bank will be 200 naira interest plus 200 million naira that I borrowed. I'll be returning 400 million naira. And then compare this in the same period with someone who raised money and has to return 1.32 billion naira. This gives you a sense when I say that raising the money is just the tip of the iceberg. If your business has not reached an inflection point, if your business has not proved this concept, then venture capital money may not necessarily be for you unless there is a match, which means you are earning in the currency that you borrowed in. So you borrowed in dollars and then you are earning in dollars. Or you have what we call a forward contract with a bank to hedge against exchange loss if it is available. But if not, then you take VC money when you have captured the cost of building the business such that any additional customer is a contribution margin. In that case, it makes sense to scale very quickly because every customer is adding to the bottom line. That is when it makes sense to take the VC money because then they are sharing in the profit and they are helping you to grow the business quickly to deliver that profit. Bear in mind, raising money is not an end in itself. It's a means to an end. Pursue that end.
My name is Dr. Rafiu Oladipo.
My name is Baba Jalal Repega.
I'm Reverend Juliet Benite.
I'm Godi Odidi.
My name is Professor Oladokun Sulaiman Olarawaju.
Souq News is on the ground, loading.
Very enlightening, very educative, and entertaining.
Thank you to Souq News.
So I'm happy that Souq TV has come into existence.
I'm happy to be here in the Souq News.
I want to encourage you to subscribe to the channel and keep watching news that makes sense.
As Browning said, one's extension of one's reach should not exceed one's grasp, or what is heaven for. And I think Souq News is doing that.
Africa needs a voice of truth, and Souq News has become one of them. And get ready, get ready, get ready.
And keep watching.
Keep watching Souq News.
Keep watching Souq News. It's a place to be.
Keep watching.
I'm okay.
My name is Raymond Bola Brown.
Hi, my name is Fred Amata, and you are on to Souq News.
If you are watching this channel for the first time, make sure you continue to watch it because this is Souq News.
Shout out to Souq News. Actually, I don't know. I really enjoyed the little moment I spent with you, and I think with more of this.
Souq News. Here's the Souq News who had the courage to transcend a locked off camera and actually have a conversation with a human being. It's a pleasure, Souq News. Thank you very much.